Hello, welcome to FountainFX on Monday the 31st of March 2014. I just want to share with you what happened this morning, just so you can hopefully help solidify some trade strategies with you, and also just to show you that you can't get it right all of the time, so don't expect that from yourself. The one thing I got when I first started to trade Forex was to focus on one particular currency pair, which is one reason why we focus on the Euro US dollar. It's to give you that element of speciality or expertise, and then you can grow from there. You can start to expand by looking at other currency pairs or trading other commodities, etc. And the other thing is to look at where you trade, going from price where it's in low volatility into high volatility. A key area of doing that is if, for example, they're waiting for news to come out. Typically the market goes quiet and then volatility comes in once the news is released. Also, there's another side of it which is called the opening of one time zone from another. And the key one is the European Open, because the majority of currency is traded during the European session. And if we scroll back to what happened this morning, just to give some key information. So if we look here at 9 o'clock, because the clocks went back in the UK, went forward in the UK and Europe, we are now, the European Open was at around about 10 o'clock in the morning, now it's after 9 o'clock. So it's moved ever so slightly. And what can we see? In the Asian session, there was a price high at 137.62 to a price low at 137.46. And the key thing that's noticeable at 137.46 is that we got a double bottom formation here, and price then pushed away from it. At the same time, we can see that with the MACD, we could see increasing momentum. Even though price was flat, the momentum has gone from being nothing to increasing upwards as price has gone sideways. So it shows an increase in momentum to the upside. So we should be looking for a buy order from around this level. Now, if we see here also, when we come on and we switch on our platform around about the 8:30 in preparation for 9 o'clock, we can see that there's this candlestick that formed, and with this very long wick, what that actually means is that at one point this was, from this point down here, from this point here all the way down to the bottom, was red, solid red candle, and then it quickly turned and price went all the way back up and it closed. So what does that mean? That means buying pressure. There's a lot of buying pressure from this area of 137.46. To allow for spread, for example, you could therefore choose to say I want to buy in at 137.48, so I get my position filled and I might get my order filled, and then I can take profit as it moves up, and I can look that if this area gets broken and pushed down, then I can put in my stop below this area. And as we can see, had we done that around about the 9 o'clock, would have been triggered off this wick here. Price then went sideways, as in a spinning top, thinking indecision, and also it was a symmetrical spinning top. So very much equal buying and selling going on there. And then we finally, when the sellers get overthrown by the buyers and the bulls then take control, we can see the price pushes up. We then get a small pullback, and price then pushes up from there all the way up to the 137.56, which is previous resistance, but not significant, and then it continues to rise. We get a pullback, so we get a pullback, and then we get another pullback, as we can see. So that's a bearish, then a bearish candlestick, but with a slight spinning top formation to it. Then this one here is a bullish engulfing. It's engulfed the bearish candlestick, so it's worth staying with this just to see what happens. Right, price has pushed up again. Now we've got a selling candlestick, so it may be a case that we want to be considering maybe we should get out at this point, the 137. What's the low? The 137.58. Okay, 57 down here. Maybe, maybe not. We want to probably run a trend line from the lows to the lows, but it might be better to do it that way. Let's see, and breaks, pulls back, but then it goes again. Okay, what we could have done is waited to see if this low of this candlestick got broken. Okay, the 137.55. But the other thing is we could have, having entered at 137.48, we could move our stop to just below the 137.54, so we're banking in profit and we've got a free trade. Anyway, prices continue to rally, and we're looking here, our stop would be down here just below the 137.56, so we're making 8 points at the moment, and prices continue to push up. So I would be looking to move my stop to somewhere around about the 137.60. But if you look here, prices actually reached 137.68, which is, if we bought at 137.48, is our 20-point target for the day. We could decide, thank you very much, I've made my profit, I'm going to take it off now, and then what I can do is I can wait and see if there's anything that's really obvious, and then from that I can then take a trade. But otherwise I would have said close your trade at your target, thank you very much. And what happens next? Price pushes up again, but look, it's starting to consolidate, it's starting to go sideways, it's not breaking up any higher. We could put a sell order, a sell stop below the 137.64 now if we wanted to. That means that we've made 16 points of profit, and now we're out. Okay, so we've broken that, we're out of the trade, and we've banked 16 points of profit. And that's a simple way of forward testing your strategy. Go back, just scroll back, and just click by click, just test it. When you scroll back, close your eyes so you don't necessarily see what's coming. But despite that, you can still test a trade theory and a trade strategy, and also what you're thinking at the time. When you go, if you click one candlestick at a time, then it will help you speed up your learning process. Don't try and distort it, like go, oh, I don't know what's going to happen, but I'm going to wait and I'm going to buy at 137.68. I'm sorry, I'm going to sell at 137.68. Why is that? Because you've seen it's coming up. Yeah? So you know to sell at 137.68 now because you've just seen that big candlestick, haven't you? Well, you know, it's just, that's how I trade. Well, no one trades like that. So this wick here as well, the other thing to be aware of is that this big amount of volatility, 30 points of whipping up and down here on this candlestick in 5 minutes, that was caused by news, and you wouldn't necessarily understand why that was. So look, if price comes all the way back down to your area of support where you bought to go long, you then get the news come, look, you'd have gone, at that point, if you'd have bought again, based on this movement, you'd be sitting there going, oh, I've just had to take over 20 points of risk against me. And then from there, fortunately, it does carry on up. But you wouldn't know that at that point. So that's why they always say, don't trade as the news comes out, wait for the things to settle. This was negative news on the euro, that's why the price fell, but it fell that far and then the rest of the market just went, doesn't matter. But you see, if you trade the market open, you've made a nice 20 points here. You don't have to try and fight anyone or try and prove yourself to anyone. You've made 20 points of profit, and you could be out for the rest of the day. So you've done 2 hours, you've done 20 points of profit, that's $200, and thank you very much. And that's really it from FountainFX. I'll share some of the strategies and tips with you tomorrow. Happy trading.